Right now, there is money sitting inside the IRS system with your name on it. Not a theory, not a trick. Real refund money. $4,000, $4,800, sometimes more, that thousands of people over 60 qualified for and never claimed. And here's what bothers me most about this. Most people think filing their taxes means everything was automatically taken care of. File, done, move on. That is not how the system works. And I've seen widows, retirees, and people living carefully month to month miss out on money they legally earned simply because one form was never filed. So stick with me for the next few minutes. I'm going to show you exactly how this happens, what that $4,873 figure really represents, and the exact forms and free programs you can use to check your own situation. No lawyer, no fees, most of it free if you do it the right way. But first, you need to understand why this happens at all. You're probably thinking, Walter, I'm retired. I already collect Social Security. I already filed. This doesn't apply to me. Here's the myth. Once you stop working, taxes get simpler. The opposite is true. Retirement adds layers. Social Security income, pensions, IRA withdrawals, part-time work, medical deductions, disability credits, and most of those layers never get revisited once your life situation changes. And you don't need to be wealthy to be missing money. In fact, the most careful people are often the ones who miss it because they assume the first filing caught everything. Where the money actually comes from. That $4,873 figure usually comes from refundable tax credits. Refundable means simple. Even if you owed nothing, the government can still owe you. The biggest one for seniors is the credit for the elderly or disabled tied to a form called Schedule R. It's just a worksheet, and most people never file it. Not because they did anything wrong, because nobody told them it existed. One missing form. That's the whole story for most people. Margaret's story. Let me tell you about a woman I'll call Margaret. She was 72, recently widowed, living on Social Security and a small pension. She came in not because she thought she was owed money, she just wanted peace of mind after a confusing IRS notice. When we reviewed her past filings, the pattern was immediate. For several years, her income and age qualified her for that extra credit, but the supporting schedule was never filed. No fraud, no wrongdoing, just a missing form. We corrected it through amended returns. Across multiple years, she received just over $4,800 back. She didn't celebrate. She just sat there, quietly, realizing money she'd assumed was gone was suddenly back in her life. That's not a rare story. It's just an invisible one, until someone checks. If this is helping you make sense of your own situation, this is exactly why this channel exists. Hit subscribe to Walter Retires now, because the next video covers something just as important. How Social Security overpayments quietly drain retirees' accounts, and how to catch it before it happens to you. The second layer, medical and retirement income. Here's a piece almost nobody is told. You can sometimes amend past returns to include medical deductions you never recorded. And when your income drops after retirement, or you have a spouse with ongoing medical needs, those numbers can shift you into eligibility without you ever realizing it. You might be thinking, I thought taxes were final once filed. Normally, yes, but the IRS allows amended returns within a window, generally up to 3 years. If something was missed, it isn't automatically gone, but you have to act inside that window. The same goes for retirement income reporting. A 1099-R entered slightly wrong, a deduction not carried forward correctly, a filing status that should have updated and didn't, none of it triggers an audit. It just quietly causes an overpayment that sits there until someone looks. Robert's story. Robert was 68, meticulous, organized, every folder labeled. He was certain his taxes were perfect, and for the most part, they were. But when he transitioned from employment into retirement, one distribution form was reported in a way that slightly overstated his taxable income. Nothing dramatic, no red flags, just 2 years of quiet overpayment that nobody caught. When we corrected it, he recovered just over $3,900. What stuck with me wasn't the number. It was what he said afterward, almost frustrated with himself. I did everything right. I just didn't know there was a second layer to check. That's the whole lesson. There's the layer where you file your taxes, and there's the layer where someone actually verifies every credit and adjustment was applied. Almost nobody checks the second layer. 3 things to check. This sounds complicated, but it really comes down to 3 questions. Did you qualify for a credit you never claimed? Was your medical or retirement income reported correctly? Can a prior return still be amended within the allowed window? That's it. No secret system, just paperwork that may or may not have been done right the first time. And a quick caution, there are companies that charge large fees to hunt for refunds for you. In most cases, you don't need that. You need clarity, and a free program can usually give you that. What to actually do? 3 concrete steps starting today. First, contact the IRS or an official taxpayer assistance channel and ask specifically about Form 1040-X, the form used to amend a prior return. Asking doesn't commit you to anything. Second, if you're a senior or lower income retiree, ask about VITA or Tax Counseling for the Elderly, TCE. Free programs built specifically for your situation, usually run through libraries, community centers, or nonprofits. Third, ask directly whether Schedule R applies to your income and filing status. If even one of those applies to you, it's worth a look. Not because a refund is guaranteed, but because not checking guarantees you'll never know. And once that window closes, it closes for good. This isn't about a windfall, it's about fairness, making sure the system reflects your actual life, not just a form filled out years ago. If there's a chance that $2,000, $3,000, or $4,800 is sitting there, it's worth checking. It's not a bonus, it's yours. I've never once seen someone regret checking. I've seen plenty regret not checking. If this helped, subscribe to Walter Retires so you don't miss what's next. And send this to one person you know over 65. Most people will never hear this unless someone like you tells them. This is general educational information, not personal tax or legal advice. Always confirm your specific situation with your county office, your state SHIP office, or a qualified professional before acting.